This is Sovereign Debt, a podcast on greening the global economy and debt sustainability. I'm your host, Jill Doshi. As many of you know, before our Thanksgiving break, we had Jen Morris, the CEO of the Nature Conservancy, on as our guest. And she talked about the global efforts to address climate change and the need to put nature at the center of those debates. We also learned a bit about TNC's Blue Bond program and the debt for marine conservation deal that they just completed in Belize, which basically swapped the entirety of Belize's external debt. So today we're lucky to have Kevin Bender of TNC with us to delve more deeply into that transaction. Kevin is based here in Washington, D.C. and leads the Blue Bond program and has literally been living and breathing this transaction for countless months. So thank you, Kevin, for being on today. And first of all, congratulations. A fantastic deal. So this was an enormously successful deal for TNC and for Belize. And many of the other parties that were also involved, which we'll get into, I'm sure. But TNC, first of all, you've been a leader in the debt for nature swap space for quite some time. You were, of course, the sponsors of the Seychelles deal back in 2015. And this transaction was part of a greater kind of this Blue Bond program. Could you, first of all, just tell us a little bit about that program in general?
Thank you, Jill, and thank you for inviting me to be here. I've been a big fan of your podcast so far, and very excited to be here, and very thankful for Potomac Group's role that you helped us out with on this very complicated transaction. This transaction was an evolution. You're correct on that. We now have established the Blue Bonds for Ocean Conservation team within TNC, and that has been a long walk, as you mentioned, from the debt for nature swaps to the Seychelles transaction. Our first debt for nature swap deal with TNC was actually in Belize, and it works well with this structure because we do need a country that is committed to the conservation side and not just the debt conversion side of the transaction. The Seychelles transaction was a Paris Club bilateral debt where we bought the debt from several members, I think it was 3 or 4 Paris Club members, and then put some grant financing in and restructured it into a more beneficial debt reduction structure. That was a much smaller deal. Financial Belize transaction, but that was a very large conservation deal. So depending on what metrics you're using.
Absolutely.
But what we saw in that was there was a difficulty in getting a discount, which is the grant component of all this that we need to restructure and make it more beneficial, the new restructuring more beneficial. That was a challenge, and we had to bring in some grant funding on our own to make the transaction work. Where we saw opportunity was moving to the commercial markets, where we can find, in many cases, bonds that are trading at a discount. And we can, the opportunity there is that governments don't have the cash to take advantage of these lower prices in the market, because that's the reason the prices are lower, because they're in a cash economic difficulty. So where we moved the Blue Bonds for Ocean Conservation was to focus on these opportunities where we could find the discount in the market and use that discount to, one, help the government out with their debt sustainability and debt service strategies, and use some of that savings to finance the conservation, and then marry that with their goals to achieve conservation. And then we would bring in the whole TNC package.
So Belize was really kind of in that sweet spot, right? I mean, because it had, as you say, a commitment to conservation already. You had a long-standing relationship with them, but they were also, as the market calls them, a serial defaulter. They were also in terrible distress, particularly in light of COVID and the pandemic and the collapse of tourism. They were already in a discussion with their creditors.
Exactly.
So that made it in some ways kind of, like I said, kind of in a sweet spot, but it also complicated the situation. Correct?
Exactly. I think everything's a trade-off. I'm not sure there is a sweet spot. There's some are better than others, but everything comes with a trade-off. And you're right. What was the number one thing that was perfect about Belize was their commitment to conservation. And we had this relationship on the ground. So we knew we had a long relationship of working with them on what their conservation goals were, how to achieve them, and coming up with solutions. Their debt was trading at a deep discount, somewhere in the 38 to 40 cent category when we were first really getting to work on this. But what we saw was when we brought this concept to Belize, because we had that long relationship and we could talk to them. It was actually the previous administration when we started talking. It was at the end of last year, and then there were elections coming up, and you can't do much during elections. So we had spoken to actually the opposition government, and then the new administration came, which sometimes is a problem when do you want to start with administration, or do you want to just wait and see, because if everything that the old administration did is bad. And on a quick side note of that did not happen. Our strategy actually worked out very well, because when we got to passing the act to get this transaction done, both sides, and then they've got opposition parties, they just like every place else, but both sides of the Senate were patting themselves on the back and taking credit for this work, because
this is really a win-win for everyone, right?
Well, it is. And in the culture of Belize, which is very supportive of the culture and the politics of Belize, which is very supportive of conservation, and in an economy that is so based on tourism and fishing and ocean is a large part of their footprint. It just all kind of worked out for us. It was a little bit of a risk there with the elections, but it did not turn out. The opportunity that we saw was that it was a very deep discount, and the benefit of, as you said, where the sweet spot maybe came from, was that Belize had restructured this in previous defaults and had wrapped all of their, amalgamated all of their commercial external debt into one issue. We had a committee set up sitting at the table to talk to, although we did not get in the direct dialogue with the bondholder committee, people were sitting at the table ready to talk, as opposed to a larger debt issuing country that would have millions of bondholders and 10 issues, and this is only 5% of the thing. It
was concentrated already into the super bond, and so so Belize really had those discussions with their creditors independent of TNC, at least initially. I mean, they were already talking about possible solutions to their external debt, and then TNC could arrive on the scene.
The new administration had just come in, and their top priority was the slow economy due to COVID, because it crashed the tourism business. Right? So, and they knew they weren't going to make their pay. They were already had capitalized the interest payments at that point. So the bondholder committee had been formed, and they needed to start working with them. So they had advisors to handle that process, and that process is usually just, what's the haircut? How are we going to, extend it? But, so when we came to them and said, here's another way, it did take us a while to figure out how, or would we just do a cash offer? Would they just stick with their bond offer? A new bond offer? Would there be a hybrid? But Belize, the government of Belize did want to get rid of it. When this Prime Minister Briceño came out and spoke right after it had been ratified, the act had been ratified and the deal was going through, his wording was that he opened his speech with saying, "We have slayed the dragon of the super bond." We moved on to and this was the fourth time going. So
yeah, it's obvious. Yeah, it's been a challenge for them for a long time. So and by TNC arriving on the scene, do you feel that you managed, or you have facilitated a better deal for Belize with the creditors? Like, do you think that they gave, a little extra, or they felt that they were also getting a win by participating in this transaction?
I was not directly involved with the
I mean, you might
bondholder
not have
committee
visibility
negotiations.
into that
Right,
room.
but I was one step away, so I was getting a lot of information from them. I do think, well, if you look at the investor who came in at par and said, "Well, I'm only getting 55 cents on the dollar," then that's a clear loss. But if you're looking at the 38 cents on the dollar of the trading price before, it's a massive gain. So there's always lots of ways to look at it. That negotiation on what the price was took a very long time to get us down, as expected, and that's your world. You can explain that better than I can. But there was a component where what it was a little confusing, right? Because we were coming in with, and we'll get into that, but DFC backing of a new structure, and the bondholders wondering whether they're going to get the new structure or why just a cash out. And I would like to discuss that, but it's
absolutely.
But there was a lot of interest from from the bondholder committee and the bondholders themselves as to what is the pickup? Why? What are you doing with this transaction, and where is the gain, and why are you doing that? And that we were happy to share. Right, we were giving the government all the information they could because they too want to participate. And I would love to say that the private sector world would be so interested in conservation that they'd be willing to give 5 points on the price to do that. But really, I think what happens is when you get to this negotiation and you're almost there, and whether the price is 53 or 57, and start explaining the benefits to the ESG or the E and the ESG benefit and conservation, and the fact
you
that
can
TNC
kind of push it
involved, it can close a deal.
Yeah. Well, and I think that's when people have asked me about the deal, I said, well, actually, the TNC's involvement made the deal happen. It wouldn't have happened without that involvement, right? So, I mean, it's hard to say like exactly where if it achieved a better price, but it certainly enabled the whole thing to be solved. So anyway, so let's delve into that a little bit more deeply, what you were just alluding to, into the actual transaction. So, for the benefit of our listeners, so TNC creates the vehicle, which is as independent from Belize, but an affiliate of TNC, and that is the entity that raises the blue bond. Correct? So it goes and it's that entity that gets the DFC, which is the Development Finance Corporation of the U.S. government. It gets that support, and then it's those proceeds that were then on lent to Belize to settle the super bond. Can you just walk us through a little bit of how that works?
Sure, and this is where the deal gets so difficult. And it gets so difficult because there are so many parties involved. And there are so many parties involved because if you look at the transaction that you just explained, it's a back-to-back transaction that all has to close at the same time. And those steps has our entity right in the very center of it.
Which is why you should get a Medal of Honor from Belize because it really happened because of you.
At least a long vacation.
Okay.
So if you look at starting on one end, there's no real easy place to start. But if we start on one end, that's the super bond that we're trying to retire. We financed the government of Belize to buy that at a discount, at the 55 cents discount, and retire it forever. So that the super bond has gone away. Our loan, which we're calling the blue loan, is from a typical financing vehicle that is created in the state of Delaware. We call it the Belize Blue Investment Company, and that's a subsidiary of TNC with a typical non-recourse structure. And it is that loan that is being credit enhanced by the DFC arbitral award and denial of justice, arbitral award default coverage, and the denial of justice coverage, which I can get into in a second. So that reduces that. That's where the credit enhancement, and if you want to call that blended finance, I would call that blended finance, where the public sector is backing by taking some of the risk out. then we were the Blue Investment Company, the project financing vehicle is financed through a loan from Credit Suisse, and then Credit Suisse issues the blue bonds into the market. But because we had the credit enhancement on the loan that is backing the revenue to the Credit Suisse
Gotcha.
to the market, the risk is much lower. So, Belize risk at the time was either triple C or selective default, depending on where you're considering it. And we got through this structure that we put the arbitral award default, and we were basing this on one example in the market where DFC had done this on a deal called Central Storage, which was a Ukrainian nuclear storage facility. And that deal had been credit rated AA2 from Moody's. So we used that as our kind of precedent, and we went through. So our blue bonds that are being issued in the market are credit rated AA2 by Moody's.
Right.
So that is a gigantic move in credit enhancement. And that's because the way Moody's and the market looks at this is it is DFC, Development Finance Corporation of the United States, so United States risk, with a little bit of, knockdown, right? Just a little bit of burden on them.
A little Belize mixed in.
Yeah, and some complications and, the legal structure and the legal procedure of arbitration. So, but we did receive the AA2 rating from Moody's, and so it wasn't, the key thing is it was not viewed as Belize risk plus assistance. It was looked at United States sovereign risk with some complications. And that structure allowed us to do what is often missed, and this is the point I want to highlight, is when you do that, in that long, complicated process, what you're doing is you are moving from one type of investor to another type of investor within the bond world, right? But the high yield, high risk emerging
EM distress,
investor, or even the EM investor, is not interested in a AA paper that's, they're there to get yield. They have other skill sets, and it's not to conserve principal and play it safe. So that market, which is a large market, is nowhere near as large as basically the general market, the pension funds, the insurance companies that want, not just investment grade paper, but AA paper. So we were moving from a strategy of financing these, countries with, say, a smaller group of the high yield emerging market investors to the large, gigantic AA paper investor who will take the time to value the conservation and will take the time to understand the structure. So
right, and they are increasingly sensitive to ESG considerations.
Exactly, and that's the big win, because this universe is large, but we're not talking about quote unquote impact investors. We're talking about maybe the impact component of the average investor. We're hoping that's the goal, is to tap into that market. And that's a big, and why I say that's misconstrued is because when you see articles about this trade, there was high concern that the paper would not be valued because everybody was looking at it as kind of a debt swap, meaning the holders that had the initial super bond were going to hold the other bond, and it is not designed for them at all. Right. So even if it was,
the super bond holders basically got their payment and exited the situation completely. They're gone from Belize, and we'll wait for another day to get back into Belize once Belize starts, tapping the markets again.
Exactly. So Belize has stepped out of the global bond market for now, and we worked with them, and that was just a small part of their large strategy. So we did work a lot with Belize on their debt sustainability and their debt strategy. So even the structure of our debt. So one thing to jump in here would be that the interest rate, if you're calculating the interest rate at the 38 to 40 cents, I don't forget exactly what it was, but it was probably somewhere in the 15 to 20% range. And there was no supplier of capital at that price. And that price is based on a few small trades. But if you were looking at, say, 17%, we ended up lending with our structure to the government of Belize at 6.1%, right? So this was a reduction in what they could afford. And then we also worked with them on the structure. We extended it to 19 years to give them some, some freedom, some cushion in the beginning to ease their financial debt service burdens. And we had a 10-year grace period on interest of the principal came at the last, amortized over the last 9 years. And even in the first years, we had a step up. So we were really trying to ease the burden of the government. And then some of those numbers, it's hard to really compare. There are no apples to apples comparisons because we don't even know what the super bond would have been restructured into to see what the savings were. But
we can somewhat guess of like if TNC had not shown up and this hypothetical world of the super bondholders would have been insisting on some other kind of exchange, right? So you can kind of imagine what they would have given and just from market experience, and what you're describing of a long dated instrument with, grace periods, etc., they would not have been able to achieve that with a normal creditor committee.
Right.
Most likely.
I'll take your word for that because that's your that's your world. But we did provide, if we compare it to what they would have paid if they continued to service the super bond over the next 5 years on our comparison, we saved $54 million of debt service, which is large for the Belize is a smaller economy. And overall, it was 190 million in reduction, comparing it to the super bond, which was 190 million in savings. But in reality, it was 250 million because there was another 60 million in there from the past restructurings that if you restructure again, you're going to lose the haircut savings that you had the last time, and that was being added. So there were lots of layers of savings. And the savings, and this is very important to your listener audience in the sovereign debt world. But for us in TNC, the reason this is so big is because we use that savings or a portion of that savings to finance conservation.
Exactly. And that's why I want to give you the opportunity to talk about that as well, because that's, key to this whole story, right? Is the conservation. And so you create this space for Belize and in terms of fiscal space. And so some of that is just savings that they get, but also part of that is then also, those payments are also for conservation and really investment in their economy since it's so heavily dependent on the oceans, correct? And that's all kind of based around this, what you call the Marine Spatial Plan, correct? And can you explain to us what that exactly means and what is the conservation that you're getting, or the commitments that have been made and how that works?
Yeah, so let me step back a little and get back to the way the transaction. There are two transactions here. One is the blue loan that we talked about, and that is used to retire the super bond. So that's financing the government to retire the super bond. And then that gets paid back, and then that funds the blue bonds eventually when you get all the way through the structure. And then the second one is what we call the conservation funding agreement. That is just a commitment for the government of Belize from that savings over the next 20 years to fund the conservation, to put that money into conservation through a conservation fund that we establish. And so the government of Belize has agreed to pay on average $4.2 million over the next 20 years in quarterly payments that will go into a conservation fund that TNC is working with the government to establish. And that's going to be an independent entity in which the government sits on the board and TNC will have a seat on the board and others will have a seat on the board. The government will be a minority, but on the board. And that entity's sole purpose will be to take these cash flows and assess projects and finance the projects. So those projects could be anybody that works within the conservation, the marine conservation of Belize. So that could be even the government. If the government, for example, wanted to put in a marine protected area and needed boats to patrol that, then they could, request grants to help fund that. Or it could be, some type of fish or seagrass or seaweed harvesting farmer, that can no longer do that job and has to be retrained as a beekeeper or a tour guide or something like that. That type of occupation.
So again, it's kind of this idea of investing in the local community, in the local population. It's not just writing checks to external creditors. It's
not at all. So yeah, and that's exactly the key. There's two components of that. One is that money that would have been paid out of the country and out of the economy is recirculated back, right? And it's recirculated back in local currency, right? Because there's no need, we don't need US dollars. So the Belizean dollars are easier to get and not so painful for the government. They can be paid. So there's a double win there on the economic stimulus and the hard currency benefit. Now there are, that's the conservation financing side. And then there's a conservation commitment side. With this, we worked with the government of Belize to figure out what exactly needs to be done. And this is where the Marine Spatial Plan comes in, because the Marine Spatial Plan is now in the future. We don't have it done yet. But a Marine Spatial Plan is exactly what it sounds like. It's a plan for your oceans to figure, and it's not necessarily a conservation plan. It's just a marine plan. But we work with the government to ensure that biodiversity protection and the conservation is included in that Marine Spatial Plan, and ensure that the protection that needs to be done gets done.
So it's a plan of how to use the oceans in the economy of So it's not necessarily you have to put all of this into some sort of, like you say, kind of protected no-go zone.
Right. No. So what we're trying to achieve,
fishing, sustainable activities.
Right. So this program is trying to achieve the 30 by 30 goals, right? So to protect, put 30% of land and sea under protection by 2030. And the oceans are a little further behind the terrestrial is difficult, but the oceans are not quite in the front of, that's why we were focusing on small island developing states, which always think about their ocean, and other countries don't quite think about it as much. Belize thinks about it a lot. The Mesoamerican reef, 30% of it is in Belize, and that's the tourism, and that's the revenue, and that's part of the culture. So to get to the 30% protection, the government has agreed to conservation commitments of getting to 30% before 2030. So we have set milestones that the government has to achieve that are time bound, right? So we have a date for when they have to finalize the Marine Spatial Plan, a date for when they have to get from 15% to 22% in ocean protection, and the next from 22 to 27, let's say, and then to 30 by this date. If the government, and then there's other commitments, this is where our science and knowledge and our on the ground presence with our local team helps the government to understand, why they would want to, where they want to protect and what they want to get done. So we're not, this isn't an investment bank that does a deal and then says, okay, if you default, we'll come back and we'll see you again. Otherwise, we're kind of done here. We'll just make sure the payments go out. We're firmly ensconced in this deal, not just on the financing, but on the science creation that the trust fund, on the on the ground team working on conservation, which is great for bondholders. We can get to that, but it's great for the achievement. But the achievement of the conservation that we need to see. Now, the marine, because we have those numbered targets on there, our scientists will work with the government of Belize on how that 30% comes together within the Marine Spatial Plan, right? So we can have a growing blue economy. We can get the biodiversity protection that we need in the places where we need it, and not just in random places that are, it just makes it a lot easier for the government to do. Because the Marine Spatial Plan will take anywhere from 3 to 5 years, maybe longer, to get done. But it has to. It's a very stakeholder involved process that needs a lot of work on the ground, and we've made that commitment to that work on the ground. The reason that's important in the financing is because if they don't meet those milestones, for instance, if they didn't do the Marine Spatial Plan by the time, or they didn't go to the 22% protection at the time, there is a 1-year grace period built in. But if they don't, then there's a penalty interest that kicks in for the government, that they have to pay more, an increased payment on the CFA, the Conservation Funding Agreement. So there's a real stick in there with the carrots that we provide. And it's in a legal document. And the key thing about these two documents, the Conservation Funding Agreement and the Blue Loan, is there is a cross default clause between the two. So if they don't meet their Conservation Funding Agreement, they default on that, they'll default on the Blue Loan, right? So there's incentive, and it brings the Ministry of Finance in to pay attention closely to what these other ministries are doing, meaning those ministries that are achieving the conservation goals. And this is kind of the World Bank structure, right? Where the World Bank works with the lending to the Ministry of Finance, and then to get projects done in the Ministry of Transportation or Marine.
Right, and ideally, you're creating this virtuous circle of governance by all of what you're explaining here is, very complex and very hands-on of the government, of both, as you say, the Ministry of Finance and other ministries that are involved in the conservation. And so you're really upping the game of the government in terms of governance, which eventually should have a positive impact as well on their narrative and their credit story and their credit rating going
exactly forward. And I can tell you that we've already seen the success on that, because the Ministry of Finance is my counterpart on this, and then we have a country director and hers is the Ministry of Sustainability and Ministry of Blue Economy and Civil Aviation. But once you link the penalty of the payments of the Ministry of Finance to an action in conservation, then they start paying very deep attention. And the ministry was very involved in all of these milestones and how were they achievable, how they're going to get achieved, what it looks like to achieve those, and what their risk is. And it really gets people to sharpen their pencils and, not just say, we'll worry about that later. It puts the pressure on to get these. And what that does to me is, and this is an alternative, but this is not a global solution. But when we look at these sustainability linked bonds or green bonds, with all the work that, CBI is doing on their taxonomy, and they're trying to make everything standard and, easily verifiable and checkable so they can make it super scalable. And, we're not just in it financially to monitor to make sure the coupons are paid. We're, on the trust fund where we've got scientists going to visit. We've got the team on the ground that's going to be actively involved in this. And it gives investors a high confidence that this is actually going to get done. It's not as replicable like the TNC, or an entity like TNC can't be in every single climate deal.
Well, that was my next question, because when Jen was on the show, I asked her, how scalable, how replicable of this, and she was very optimistic and bullish and ambitious. But what you're describing is actually really quite full on. There must be some sort of constraint on how many of these you can actually do. Or is the idea that you can partner with other organizations and just share the technology and share the kind of knowledge?
Yeah, exactly. Well, first of all, as Jen and you discussed, TNC is very large, and we're in many, 70 countries with 4,000 people. So we can do a lot of these deals.
And I don't mean to. I'm not underselling you, and I'm not undercutting what she said. I'm just
exactly, and I can see where I appreciate that you brought that up, because it is not only something that we can handle with the countries, as we roll this out, but you're right, we'll hit other things, many things that will limit our growth, but we do have solutions to get to the next level. And the number one solution would be, as you mentioned, partners. We're even limited by how much insurance policy can we get or guarantees. But there's lots of DFIs out there, and DFC has done a great job and done a lot of work to get this done and kind of established it as a product. But there's not unlimited appetite. There's appetite for DFC to do more deals, but there's not unlimited appetite. I don't see any near-term problems with rolling these out as fast as we can. And there are countries where TNC doesn't work. We could either expand into that or partner, as you mentioned. And Jen Morris did mention working with Conservation International and WWF and TNC working together. There are many organizations that could help us out, but even with the marine spatial planning or the on the ground working on the projects and the trust fund and the governance of the trust fund, I don't see any problem with the scalability. What I do see is why I say that it's not as scalable is I don't see green bonds doing that structure, right? It's not that ours is better or theirs is better, but green with the taxonomy that CBI is working on, they just want it for every deal, can just kind of check these boxes so investors can say, all right, I feel confident.
Yeah. No, well, that's a whole different beast and a whole different kind of purpose for it.
So our structure is just one option, but I think it's a very good option. It's just one that we can do that others would struggle to have this much involvement.
It's certainly been a fantastic transaction, and you, like I said, you really deserve all the all the medals and vacations and scuba diving trips, whatever it is that you want, because you've really done a spectacular job personally, you as well as just the entire TNC organization and the other firms you worked with. So really, my heartfelt congratulations and well done. And we look forward to, with Potomac Group, working with you on future cases as well as just seeing the other innovations that you come up with. So, and thank you so much for being here today.
Thank you for having me. And like I said, there's plenty of work now. The trick is to make this more systematic and scalable. But we've had so many parties involved with this. We've got lots of interest with people helping us. There's a lot of opportunity. And like I said, any country that has debt trading at some debt that could be restructured in a better manner, doesn't have to be at the deep discount, but there's an opportunity there, and has the drive and the commitment to get the marine conservation done is a prime candidate for us to do the next deal.
Great. Well, I have a feeling you're going to be very busy. so
Let's hope.
Excellent. Well, thank you so much.
Thank you.
Thank you for listening. If you enjoyed the episode, leave us a review and subscribe to the show wherever you get your podcasts.